Hey guys, what's up? Alec back with the daily stock market, and look at that, Snapchat up almost 60% on Friday. So today we're going to go over a few different stock that had huge market movements on Friday. We're going to talk about what we're going to expect for the rest of the week, and also some stocks that I'm looking into buying. So make sure you stay throughout this entire videos so you can see what stocks I'm talking about. Smash a thumbs up early on this video because you know it's going to be a banger, and let's jump right into it. So Snapchat, I have around 60 shares personally on Snapchat, all right, up 27% in the last week, and from the bottom up over 60% if you bought at the perfect time. We see a lot of positive momentum jumping back up with stocks, all right. We saw Snapchat at a high of $75 per share. Shares of Snapchat went through a near 60% drop in October as growth sold off. The social media app will continue to grow daily active users, revenue, and free cash flow. Snap's platform growth is now heavily discounted. All right, we see more of a summary. Snapchat reported a better than expected Q4 earnings with revenue beaten by $100 million and strong margins driven by EPS beats, earnings per share. Average monthly users grew by 20% year over year, which is huge. And the average revenue per user grew about 18% year over year. Through the rest of the world, average user revenue per user only grew 1% year over year. Potential signs of challenge with international monetization. When using after hours price of $39 per share, valuation is 12 times forward revenue, which is several multiples above their peer groups, appearing to remain aggressive. All right, Snapchat reported better than earnings. We already went over that. Management also solidified their confidence in sustainable positive free cash flow, which gives them additional flexibility in terms of organic growth, investments, and potential M&A. See the Q4 earning and guidance review. As many headlines notice, Snapchat posted their first quarter of positive net income as a public company, which is huge, something that investors have been waiting for on many quarters. This was also the company's first full year of positive operating cash flow and free cash flow. Overall, Q4 was a stronger than expected quarter, and there seems to be a sense of optimism heading into 2022. Revenue during the quarter grew 42% year over year, $1.3 billion, which is huge, 40% year over year. Wow, on revenue, which came in over $100 million over consensus. I believe that the biggest risks in this company remain in the recent changes Apple has made in their iOS platform in late 2021. This change affects advisors' ability to track consumers' purchasing behavior, thus making it more difficult to gain insight into the right advertising direction. While management has also noted they are working around this challenge, there could be longer-term pressure on the monetization for the company. In addition, valuation remains at a premium relative to the peers, and with growth facing challenges competitors, investors may feel pressure to sell given the lower growth driven by tough competition and the law of large numbers. Also, Snap will need to continue to invest heavily in their product in order for users to remain engaged and active. If Snap were not to improve their app, users would ultimately look at other social media platforms. From the current price of, after being up 58% one day, analysts still have a 41% upside to around $55 per share in the next 12 months. You can see some analysts have them as low as $36 to $55 per share. Some have them as high as $93 per share in the next 12 months. You can see where some of these analysts are coming from. Goldman Sachs, we see Wells Fargo, all above $60 per share in the next 12 months for their price targets. JPM Securities. So we have a lot of analysts covering Snapchat right now, a lot of five-star analysts, and most of their price points are above $60 per share. So overall, if you're going to be holding for probably 12 months or longer, I think Snapchat's going to be a solid one to add into your long-term portfolio. However, they just shot up 60%, so I would definitely wait for them to cool off and go back down under $30 per share before loading up for short term. Let me know if you guys like when we dive a little bit deeper into specific stocks like that, or if you like when I go rapid fire over these bad boys. So we see Amazon up 13% in one day, all right, after it sold off around 10% or more in the last 3 months. It was actually down 20% at one of its lows. I think Amazon's a great one to always dollar cost average into for long term. They're a safer stock for long term in my portfolio. I think they're going to continue to grow revenues around 20 to 30% for the next 5 years, and I'm sure the stock price will beat the market consistently for the next at least 2 to 3 to 5 years, in my opinion. So that's why Amazon is one of my favorites. And anytime they fall 10% in 3 months, 20% in 3 months, you're going to catch me load up on that stock. And I'm looking for a split to come to Amazon, how Google announced their split. So if Amazon announces a split next, that could definitely rally the stock further. Now, Square is an interesting one that I probably want to do a deep dive in. Like I said, comment below if you guys enjoy the deep dives, or if you just like when I just talk briefly about the stocks and price points and where I'm looking to get in and kind of sell at. So here we have Square down to almost $100 per share. And look at that. Not even almost 3 months ago, we had them almost at $300 per share, which is indicating around a 200 to 300% upside if they're going to be going back to new all-time highs. In my opinion, Square/Block will definitely go back to new all-time highs again. It could take a little bit of time for them to get there. However, with the blockchain and cryptocurrency approach they're taking, I think they can be a good one to stuff into one of your long-term portfolios, and even like a Roth IRA account. I think they're going to be around for a long time. This is one I want to do a deep dive in and compare exactly everything right to PayPal. Make sure you're subscribed for that video in the future. I'm going to be planning on doing that in the next week or so. And if you don't see it in the next week, message me on Instagram to remind me, because I definitely want to do a PayPal versus Square deep dive and see who's the better competitor overall for long term. We also saw Wix up 9%, DraftKings up 6.5%. We saw Twitter up 7%, Roku up 9%, Coinbase up 7%. Unity was up 17%. All right, this is the one I want to talk about in this video. I've been loading up on this one for a while now. All right, in the past month, they're still down 8% and 29% in the last 3 months. However, they rallied 17% in one day. All right, we kind of see them close to a support right around $100 per share. I think under $100 per share is a great place to get into Unity. This is a little bit more of a high risk one. This is a metaverse stock. You can see Unity Software develops video game software. It provides software solutions to create and run and monetize interactive real-time 2D and 3D content for mobile phone, tablets, PCs, consoles, and augmented and virtual reality devices. The firm operates as a platform for creating and operating real-time 3D content. Its solution for games, automotive, transportation, manufacturing, films, animation, cinematics, architecture, engineering, construction, brands, and creative agencies, gambling, and ed tech sectors. All right, you can see it's founded in 2004. The market cap is $31 billion. So can it get to a $100 billion company? That's the real question if you're going to be investing into Unity that you want to know. It was a $60 billion company earlier this year. I definitely think it can get there again. We also see that it's not a positive earning company. They just reported negative earnings. However, it looks like in the past, some of the quarters, they actually reported some killer earnings in Q2, for example, where they reported positive earnings. All right, so here we see our summary. Unity has given up 50% of its gains in the last few months. Now it's time to revisit the underlying thesis. Unity's path to positive free cash flow isn't likely to hit before 2024. How investors should think through this aspect. Unity is trading substantially cheaper than it was just a few months ago. Investors seek exposure to a very sticky real-time 3D technology platform, may consider buying the dip. Again, this is at the epicenter of the metaverse right now, all right? The investment thesis, Unity Software is one of the companies at the epicenter of the metaverse movement. Meanwhile, investors' sentiment to invest in highly innovative and disruptive companies have substantially dwindled in the past few months. You know, a lot of people are flocking to the safe stocks right now. For its part, Unity remains focused on increasing the reach of its platform with its acquisition of Weta Digital. Rather than building in-house the technology that's required through its acquisition of Weta Digital, Unity is able to use many of the features used in films and deploy them into games. From investment perspective, investors are asked to pay 20 times its 2022 sales. Clearly not the cheapest valuation around, particularly right now. Now let's jump into Unity's revenue growth, because this is very interesting. Here you see in Q1 2021, it actually grew by 41%, 48%, 43%, and then it went down to 32%. Unity has consistently stated that it has what it takes to grow its top line 30% over the long run. Consequently, it's no surprise that Q4 21 is pointing for a nudge above this figure. Unity has its upcoming Q4 21 results just weeks away. Investors should stay tuned in for its updated guidance. So we went over the Q4 earnings per share, EPS, in this video. After this video, if you want to look at the updated guidance on Unity, that could be a good thing to do. As you can see, there is a lot to be attracted about Unity. Now let's discuss the blemish in the investment thesis. Bearish considerations. Unity is yet another company that is very well positioned for future growth, but at the same time remains largely unprofitable. For investors' perspective, this always causes a problem. However, right now in the present market, this is being felt acutely. All right. For its part, Unity states that it's very much investing for growth as part of its strategy, and that investors shouldn't be too worried about the lack of profitability right now. Unity openly states that starting in 2023, Unity will be operating at free cash flow break even. Here we see the guidance for Q4 also. So if you stayed throughout the whole video, you can see the guidance right there. We can kind of see it increasing about 7 to 9%. That being said, there's really no reason to believe that just because investors were willing to pay 30 to 40 times forward sales just a few weeks ago, paying just 20 forward sales is necessarily cheap. Indeed, as I've already continued, in the best case, 2023 Unity will be operating at break even on free cash flow. Bottom line, as discussed, Unity provides investors with ample visibility and has very sticky business model. These two aspects combined should translate into premium valuation. The question that obviously remains outstanding is exactly how high a premium should investors be willing to pay for Unity. Also, whether or not matters that Unity will not be reporting positive free cash flow for a considerable amount of time. So you have to take all that stuff into consideration, but let's see what the analysts have to say. On average, there's a 52% upside over the next 12 months to around $165 per share again. Personally, I think it'll be at all-time highs in the next 12 to 24 months again. So I would say $190 per share in the next 12 months is definitely achievable for something like Unity. However, investors could get scared by that positive cash flow. All right, so we see some one-star investors coming in. We don't really want to look at those. We see Piper Sanders analysts coming in, reiterated 20 days ago, $180 per share in the next 12 months. He's saying that it's a buy. You see Goldman Sachs analysts, Credit Suisse analysts, William Blair analysts, all coming in at around $180 to $190 per share for Unity in the next 12 months. So there is some high risk with this one, but obviously there is high reward as well. And if you believe in the metaverse, that should be the underlying investment thesis when it comes to Unity software. If you believe in the metaverse, it definitely should be a top stock that you should be looking into adding into your portfolio. And if you add this to a long-term account the next 5-10 years, who knows? Unity could be $100-200 billion company if they keep building things the right way, get that net income up, get that positive cash flow up, and become a positive producing company while continuing to grow the top line, which would be as simple as increasing the revenue year over year, quarter over quarter, which they already have on lock, which is why they're trading at such high valuations and multiples already. So if you guys appreciate that video, make sure you smash a big thumbs up, share it with a friend, and look at how many people we have reached over 1.4 million accounts in the last 30 days. So we've been absolutely skyrocketing on our account. Thank you guys for all the love and support and sharing the videos, liking, commenting below, and everything in between. If you want to join my close friends list, we now have over 1,500 members on the close friends list, and you want to see some success stories, click on success number 3 on the highlight section of my Instagram. Read that. Success number 4 is the more recent one. Read through those as well so you can actually see some real success that students have had with the program. All right, guys, I'll see you in the next video. Remember, don't time the market, buy the market. Peace.